Hello, Tom from In-Out Signal with a new analysis of the Euro-US dollar long-term outlook recorded on June 1st, 2012. I would like to start with the very long-term picture. So let's have a look at the weekly chart, and let's zoom out on that weekly chart, which brings us to a chart that shows a very dynamic movement from starting about 2001 leading up to 2008, and from there on we can see that there is a corrective type pattern where you can see the waves are overlapping here, so we cannot find dynamics in that, and we also see that the waves are moving within a channel, and today we are about in the middle of that channel, which is visible to the right. Now let's apply a bit of Fibonacci to see what has happened in all that long time span. And if we do so, we will find that here in 2010 we already reached the 50% retracement level. So that would be a point where a new dynamical movement further up here could have started, but as we can see, something else has happened. We have rebounded, we have formed a channel, and now we are back within that channel moving further down. There's a good chance from that long-term perspective that this movement will go all the way down to the lower channel limitation, and that would actually lead us to the 61 retracement level, which is perfectly fine for a proper retracement, from which then we would expect another movement upwards, and that could be much higher than the highs we had at 160 in 2008. So that gives us a bit of an overall picture. So our preferred direction at the moment is going lower in the exchange rate Euro-US dollar, and we would probably focus on the range between 1.2 and 1.1. I will just take a little circle here and indicate that area that would be our target area with an orange circle. Good, so that will finish our consideration of the weekly chart. Let's move on now to the daily chart, and here we can see that there are already some lines in there. These lines are from May 14th. That was the last analysis that was carried out. I will put the cursor now on May 14th so everybody can see when the analysis was done. So that's about here. That's when the last analysis was done, and we can see that at that time it was expected that there is a 5-wave pattern. Those are the brown numbers, 1, 2, 3, 4, 5, leading down to 1.2. Now I have removed all the old Fibonacci drawings, so for your convenience I will redo the whole analysis again. We had a dynamic move coming all the way up from here to here. That was the last dynamic move. You can see how the price then went back up a little bit above the 150 line in a corrective type pattern, and started from here a first wave, second wave, and then a third wave, which again has a sub-wave, but we will not focus on this at the moment. When we take a Fibonacci extension, then we should measure the first wave. For that purpose, let's zoom out a bit here. And then let's take this first wave, measure this, and apply the extension to this high for wave number 2. And you can see that we have run about 161% already, 161% already, and we do expect it actually to approach the target. It doesn't have to go all the way, but we will go close probably of the 261 extension. So I will try to make a forecast, which should be taken very carefully. You know, the markets, we never know what they're doing, but we do think that this move could go down as far as 122. Then we expect the fourth wave, a rebound, which I'm also drawing. It should run up about 38% in an ideal case. And then we would have another movement that should be in the order of the first wave at least. So the first wave, if we measure that, that was this length. I'm just taking this length. That would be the minimum we would expect at this point. And this would be put here. This would be a minimum idea of where the fifth wave could be. But the fifth wave, as you know, could be much longer, so it does not need to be 100%. It could, again, shoot for 161 or even further. So let's put some numbers on that chart. So we would have the number 4 up here. And the fifth wave would be around 120. That would be our first target to complete this 5-way pattern. So let's go back, zoom out a bit, and see what's at that location. And we can see that with this target that we have designed from here, we would get somewhere close to this low, so a little bit between 120. And let's go back to the weekly chart. We would see where we are there, and this would be again the upper limit, the 50% retracement of the very long-term chart. So this is a good target for us to shoot for within the next few months. Thank you very much, and see you soon again.